Welcome back. Abu Dhabi's real estate sector is becoming more competitive and moving further in favour of tenants and occupiers, according to the latest report. The Abu Dhabi Real Estate Market Overview for the second quarter by Jones Lang LaSalle shows that there has been a significant rise in supply across all sectors. Total office supply for Q2 came in at approximately 2.72 million square metres and is scheduled to increase further during H2. The report stated that as the office sector is entering a period of oversupply, the vacancy rate has increased to approximately 32% and is expected to increase further. Residential stock increased by 2,900 units over the quarter. As for retail, the delivery of the retail podium at Etihad Towers increased the retail stock by around 7,500 square metres, and an estimated 300,000 square metres of retail GLA could be delivered to the market by the end of the year. The report added that given the spending power of the population and additional growth from increasing tourism, there remains significant demand for retail in the Abu Dhabi market. Dubai International Airport recorded its busiest first half year in its history, with 27.9 million passengers passing through its 3 terminals between January and June of this year. According to the traffic report issued today by Dubai Airports, Dubai International handled a total of 4.7 million passengers in June, a robust growth of 16% from the 4.1 million who passed through the airport in June of 2011. The year-to-date traffic reached 27.9 million, up 13.7% from 24.6 million in the first half of 2011. The top 5 destinations served by Dubai International during the period with the greatest passenger volumes were India, Saudi Arabia, the UK, Pakistan and the US. Emaar Properties has recorded a net operating profit of 1.22 billion dirhams for H1 of this year, a 45% increase compared to the same period last year. For the second quarter, the firm saw a net operating profit of 614 million dirhams, 45% higher than second quarter last year. Additionally, shopping mall operations were underpinned by the strong performance of Dubai Mall that recorded approximately 31 million visitors in the first 6 months of this year. The Emaar Malls Group contributed approximately 1.3 billion dirhams to the first half of 2012 revenue, an increase of 23% from 2011. And with that, let's look at the stock indices across the GCC. Markets surged this past week in trading, and the euro snapped a 3-week losing streak against the US dollar, Japanese yen and British pound, flourishing thanks in large part to comments by ECB President Mario Draghi on saving and protecting the euro. With a stacked economic calendar for the week, we earlier spoke with Gaurav Kashyap, the head of the DGCX trading desk at Al Pari Middle East, on what he was watching out for this week.
Well, financial markets reversed their previous losses very sharply last week and moved to the upside following comments by the ECB President Mario Draghi when he committed and pledged himself to the Eurozone cause. In his most boldest comments yet, the ECB President said that the ECB would be ready to do all that was necessary to protect the Eurozone from a collapse. Now, although these are mere words, they don't show any major developments. We see this as a brief blip in risk sentiment, which could provide a good selling opportunity on this relief rally. Overall, we don't see any of the trends to have changed. It does not answer the question of Spain's funding issues and their widening bond yields. President Draghi will be put to the test this week. His words will be put to the test when the ECB meets to announce their rates on Thursday. They're largely expected to remain unchanged at 0.75%, and there's an outside chance that the ECB president may announce an additional LTRO to ease the easing conditions in the Eurozone. Also on Thursday, the Bank of England will be announcing their rates, largely expected to remain unchanged at 0.5%. Although the Bank of England is in a bit of a sticky situation, as data from last week showed that the UK GDP contracted for a second consecutive quarter when the data came in at minus 0.8%, which confirms that there's a double-dip recession in the UK economy. Preceding this, we have Wednesday's FOMC rate decision, which is expected to remain unchanged at 0.25%, although we could see Fed Chairman Ben Bernanke announce some kind of MBS purchases during that rate meeting. And finally, we wrap up on Friday with the US non-farm payroll report, expected to come in at about 80,000.